An economic disaster is being unleashed. Hey everybody, it's Bull Boom Bear Bust, and back for another dose of economic reality. It is Tuesday, May 3rd, 2022. What do we mean by an economic disaster? Well, think about this. Let's start off right here. Americans, on average, are in the most debt that they've ever been in history, at any other time in history. So not only is debt at all-time highs, so when you add up the total, it's a lot more than compared to the financial crisis even. But it's not just that. It's not just a few people with a lot of debt making the total higher. It's most people are in the most debt they've ever been at any point in their life. Now, I had someone down in comments on this channel say everything's fine, the economy's good. I went to the amusement park, it was packed. It was packed AF, is what he said. And it may have been packed. I perfectly understand it. It's easy to believe that it could be packed. Why? Because people are willing to go into debt and swipe their credit cards to do fun things and to have entertainment. And we're starting to see some areas where people are cutting back on spending, maybe Netflix, and maybe because people were in their house for so many months and even years in some cases. With the health crisis, people are wanting to go out now with the spring weather arriving and wanting to go to amusement parks. But to think that the economy is doing good and everybody's doing well financially because the amusement park is packed, well, that's not looking at the obvious. Let's take a look at the debt levels. Recent article here out of the journal, Americans are taking on record debt in 2022. And it asks the question, are we in trouble? And it says here that this could be flashing a warning sign about the economy. Well, it's not just the economy, it's the American consumers about ready to be broke, and we're going to see a bankruptcy storm about to hit, and it's going to hit very soon, I think by the end of the year. And it's very easy to look around and you see maybe the neighbor's got a new car, maybe your friend or relative just bought a new house, but remember, do not mistake debt for wealth. Do not mistake debt for wealth. And now all these loans that people took out, all this borrowing that people buried themselves under, all this debt, it's going to get very painful because guess what? Rates are rising and this debt's about ready to get a lot more expensive. So you've got some adjustable rate mortgages, you've got credit cards, which are not fixed. From month to month, they can change your interest rate on your credit card debt. Right? So think about this. This is the worst time to have rising interest rates. Debt's at all-time highs, and now they're raising interest rates. Why not have higher interest rates when things are inexpensive, when prices are cheap, when home prices are low? That's the time when you want higher interest rates because that prevents the bubble from forming in the first place. When prices are low and they keep interest rates low at the same time, that starts the bubble being inflated. That is the first breath into the bubble. Now here we are, all-time high debt levels, all-time high home prices, all-time high car prices. They pulled back a little bit recently, but very close to all-time highs. All-time high cost of living wherever you look. All-time high gas prices. They pulled back a little bit, but very close to all-time highs. And now here we come with the rate hike. So it's a continuation of this boom and bust cycle. Now, will the deciders change course? They could. Look what happened during the last time they tried to raise rates. They tried to raise rates, 2018, 2019, and they had to reverse course very, very quickly. Does anyone think it's going to be any different this time? Well, a lot of people think they're just going to keep on raising rates, no matter how bad the carnage gets, no matter how many people file bankruptcy. Other people, including myself, think they're just going to turn around and reverse course and drop rates again to all-time lows and resume buying everything under the sun. Here's going to be the very difficult part of this. The people holding credit card debt, well, they're in for big, big trouble because that debt is about ready to get a lot more expensive. So think about this, all-time high debt levels. The prices of goods and products and services is not coming down. So people are still going to have to pay more just to survive. And now interest rates are going up on that debt, right? So all of this together, this is basically a perfect storm of debt and rising rates. And it's not going to be pretty for a lot of people. Now, there's a few people out there saying that home prices are going to crash or even maybe not crash, drop. Some people are saying that they're going to crash. A lot of people saying home prices are going to come down. Other people are saying home prices are not going to come down. But think about this, even if home prices did come down, how many people are going to have good enough credit to be able to buy a home or to get a loan to buy a home? It's going to be cash buyers. And what's that usually means? It's going to be investors, institutions, and companies coming in and buying homes. So people sitting back and praying for a housing market correction or even a crash are going to be, a lot of them are going to be, have a rude awakening because they won't be able to get a mortgage. So unless you have cash, you may not be able to buy. There's going to be so many people with terrible, terrible credit scores, they won't be able to get a mortgage. When you look at all the debt out there and now the rising interest rates, which is going to lead to a bankruptcy storm in the very near future. Also, credit card delinquencies are on the rise. Foreclosures are on the rise, about up 180% year over year. Now, historically, it's still pretty low historically because we had almost zero foreclosures because of the foreclosure moratorium that lasted so long. But now the trend is reversing, and we're starting to see a lot of people that were over leveraged in big trouble. Now, speaking of big trouble, Paul Tudor Jones is out there saying that he can't think of a worse financial environment for stocks and bonds right now. Remember the wealth effect. When the stock market was high, when home prices are high, that gives people the feeling that they have money to fall back on. They say, okay, I've got this home equity. I can sell my home if things get bad. Well, first of all, sell your home and move where? Because even rents are expensive. And then the other side of the coin, if you don't sell your home, what do you have? You have a higher cost of living because now your property taxes are higher. And look at everything else that's going up with it. Look at electricity. Here's a recent article. Just came out today, May 3rd. Get ready for another energy price spike, high electric bills. The national average residential electricity rate was up 8% in January from a year earlier, and that's the biggest annual increase in more than a decade. So on top of everything else, now most people's utility bills are going to go up much higher. And in some states, it's even worse. In Florida, Hawaii, Illinois, and New York, rates are up about 15% year over year. And we're not even into the summer months yet where typically people use the most electricity. And to make it even worse, a lot of people that had saved up cash during all the shutdowns and not having to pay rent, well, a lot of them lost their cash in the stock market. Look at about $1 billion worth of losses for newbie and people that were newbie investors or first-time investors during the past 2 years. And now look at the S&P 500. It's having its worst start to the year since 1939. So continue to get ready, folks. The second half of 2022, I think this is going to hit. I'm not sure if it's going to be earlier, maybe July, August. I think it's going to be more towards the end of the year, October, November, December. It's going to be the time frame that I'm looking out for. So continue preparing because it's going to get really, really bad. We see crime is rising. When people get financially strapped, they get more stressed out. There's more tension, stress, depression, and it causes people to outburst and have very short tempers. All right, we're going to wrap this up, everybody. Ride the bull, prepare for the bear. Thank you for being here. Be well.